What's up everyone, welcome back to my channel, welcome back to a brand new video guys. I hope you all are doing great and I hope you're having an amazing week. Yes, as you read the title, today I'm gonna show you a Forex trading strategy without using a stop loss. I know it sounds crazy. To be honest with you, this is not a strategy I invented. This is actually a strategy I saw in a video and I thought of it that it was a pretty interesting strategy and I decided to make a video about it so that you guys may benefit from it and maybe use it, of course, if after you do your back test and decide if this strategy is worth being used, of course, and if it suits your style of trading. Okay, so before I start the video, make sure you are subscribed to the channel if you enjoy my content, and also turn the notification bell on, because like this you won't miss out on any of my future uploads. Also, feel free to join my free signal group. The link is down in the video description. If you want to learn my strategies or book a one-on-one session with me, you can DM me privately on Telegram. Link is also down below. And if you want to check out my IG or website, both links are down below as well. Okay. Also, feel free to share and like the video. And if you have any and if you have any questions, make sure to drop them down below. I'll make sure to check every single one of them. Okay. So let's get straight into the video. Well, the strategy is very simple. All you have to do is to go on the indicators and search for squeeze momentum. Oh, indicator. One moment. Squeeze momentum indicator. Okay. 1 second. Boom. And this is the indicator. You just click it from Lazy Bear. Okay. You just click it and you leave it on default. Okay, you will have it right here on default. So you might ask, well, how are we going to use this strategy without a stop loss? It's insane. Like, isn't it risky? And I must tell you that of course it is risky, but if you establish a fixed lot size that you need to use, because on this strategy we won't focus on having a fixed risk percentage per trade. Why? Because we don't have a stop loss. Okay, usually you guys know that I always tell you to have a fixed risk percentage that you want to risk every single trade, because the stop loss might vary. Sometimes you might have a 10 pip stop loss, sometimes you might have a 30 pip stop loss, and that's why you need to use the same risk percentage per trade, and after that determine the lot size. Okay, but for this strategy, as we do not have a lot size, as we do not have a stop loss, sorry, we need to use a fixed lot size. Okay, so let's say you have a pretty big account, and for this video example we are going to use a 1 standard lot. That means 1.00 every single trade. Okay, I'm going to use this strategy on the M15. I'm pretty sure you can use it on every single time frame. You just need to go and do your own backtest with it and see which time frame suits you the most. If you don't have that much time, you can just focus on the hourly, 4-hour or daily time frame. But if you want to be a day trader and you do have time to sit in front of the charts, you can consider choosing 15-minute, 30-minute, and if you want to be a scalper, you can go for the 5 or 1 minute. Okay, but for this video example, I will use the 15-minute time frame. Okay, so now for the rules. Well, you need to enter a sell once the squeeze momentum indicator prints a red bar right here. Okay, it's very visible. Once it prints a red bar on the squeeze momentum indicator, which is right here, which is this candle right here, that's exactly when you enter a sell. Okay, so we would have entered a sell right here, and as we said, we don't use a stop loss. But now you might ask, well, where do we exit? Okay, so we exit once the squeeze momentum indicator prints a blue bar, a green bar, sorry. So right now we would have still been in this trade. We would have been right here. Okay, so as you can see, this is where we would have been, because we are still printing red bars, so we are not exiting the trade. Okay, so right now we would have been up $470. Is my math correct or not? Around, yeah, $472 for this trade. running right now. Okay, of course, if we used a standard lot, a one standard lot. This is something that you have to backtest and then to determine, because you don't want to use a one standard lot if you have a 1K account, okay, because eventually it will blow you out. Okay, so now let's look for a buy example. Okay, so the same exact thing, we would have entered a buy right here as it printed a green bar on the squeeze momentum indicator. So we would have entered right here. And when would we exit? Well, we would have exit right here, okay? Because right here we can see that a very small red candle was printed, and this is exactly where we would have exited, okay? So as you can see, this is where we would have exited the trade, but first the trade went into drawdown, okay? The trade went into drawdown. So we had a drawdown of what? We had a drawdown of $370 before the trade went into profit, and we fully closed it here. We would have fully closed it here with a profit of how much? With a profit of $650, something like that, okay, or 620. Okay, so you would have closed here with a $620 profit, around that. All right, but first it went $372 in the negative if you were to use a one standard lot. Okay, if you used a 0.10, then this would have been a $62 profit, and this would have been a running $47 profit. Okay, it really depends on what lot size you decide to use, and you should decide to use a lot size according to your account size. Okay, so why would have we exit here? Well, because we printed a red bar on the squeeze momentum indicator. Okay, so that's where you need to exit. So let's check out another example. Okay, so here another green candle printed right here, and a green bar printed as well on the squeeze momentum indicator. So we would have entered a buy right here. And where would we exit? Well, we would have exit right here. Okay, so we would have exit right here on this small doji candle, and this would have been a very small profit, as you can see, but no drawdown either. This would have been a $90 profit, around that, but no drawdown either. Okay, so this would have been a $90. And this is where things get a bit messy, and this might happen to you sometimes. Okay, so this is where you would have closed in the negative, because we would have entered a sell right here, okay, after this small red bar printed, okay, but no profits were made because we would have closed right on this candle right here. Okay, so no profits were made. We would have closed right here, and this would have been a minus 271 and 5 minus 300, something like that. Okay, so here you would have closed in the negative, minus $300. So this would have been a loss for you. And then we can see we would have printed a green candle right here. So you would have entered right here on this candle, but you would have closed out right around here on this candle. So this would have been another $200 loss. You understand what I mean? It's pretty messy, but you would have entered a buy right here because of the green bar that was printed right here, and you would have closed around here. Okay, so that would have been another loss. Okay, you would have closed in the negative again. Okay, so let's put a minus 200. Okay, so this would have been two bad trades. Okay, so we had one very good trade, another good trade that is currently running, but as you can see now, the profit would be smaller. The profit would be smaller than $472 because price is moving up. But until we have a green bar printed on the squeeze momentum, we still stay in the trade. Okay, so let's move on, and I will show you guys some few more examples. So this is where we would have entered a sell. I'm pretty sure this is a loss as well, and this is where we would have got out of the sell right here on this candle, and we would have lost how much? 927, around $280 lost on this trade as well. Okay, boom. So we would have lost here again, unfortunately. Let's see, this is where we would have entered a buy right here after this green bar. And where would have we exited? Well, we would have exited right here on this candle. Okay, and no drawdown on this trade, and we would have made a 742 940. Okay, so we would have made a $200 profit right here. $200 profit on this trade. So let's move on now. I'm gonna give you one more example before ending the video, because you guys already got the process, already understand how this works. Okay, so here after this red candle was printed, okay, you can see the red bar on the squeeze momentum, so we would have entered a sell right here. Again, pretty much no drawdown at all. And where would have been where would have you closed? Where you would have we would have closed right here, okay, when the green bar printed, and which is right here. Okay, so this is a pretty big profit, actually a pretty good trade. So 350 with 7, around the $600 profit. Okay, so this would have been a $600 profit trade. As you can see, a very good one. So let's actually look at one more. So we would have entered a buy right here. All right, as you can see, boom, on the green bar, we would have entered right here. Again, pretty much no drawdown, I mean a bit of drawdown here. And where would have we closed? We would have closed right on this candle, and this would have been a minus $20 trade, unfortunately. Okay, this would have been a minus $20 trade, small loss. Okay, minus $20. And let's see one more before ending the video, which is this sell right here, which was actually a pretty good trade. So we would have entered on the red bar on the squeeze momentum. Again, no drawdown on this trade, which is pretty cool. And we would have exited right here, okay, on this green candle. So we would have exited right there. What would have been the profit here? So pretty much 0. Oh, this would have been a $650 profit, which is very good on this trade. So overall, as you can see, this strategy is pretty profitable in my opinion, especially if you catch big moves with it. So yeah, as you can see, we have a win here, we have a small loss here, big win actually, we have a big win here. Let me actually note them down, okay, to actually make to actually calculate the profit. Okay, so we have 650 minus 20 plus 600 plus 200 minus 270 plus 90 minus 500, because these two were negative, minus 500 plus 620 and I'm not gonna count this one. I'm not gonna count this one because it's still running, okay? So in total, without this one, which is running in profit, I'm not counting this one, we would have profited $1,370, okay? And as you can see, like the drawdown was pretty small in my opinion, okay? So of course you should use a lot size that suits your account. You should not use a one standard lot on a one key account. In my opinion, that's too risky. Instead, you could use a 0.10, I think. Okay, a 0.10 might be a good lot size to use on that type of account. All right. So in what time span did we manage to make $1,370? In the time span of 2 days, we managed to make this profit, okay, on a one standard lot size. If it was a 0.10 lot, we would have managed to do $137 in 2 days using this method on AUD USD 15-minute time frame. As I said, guys, feel free to backtest this strategy. Maybe implement it in your own strategy. If you already have a profitable one, maybe this indicator will help you as a confluence. And feel free to try this strategy out on other time frames as well, time frames that suit you, that suit your program and style of trading. And yeah, as I said, if you have any questions, make sure to drop them down below. I'm pretty sure y'all understood how this strategy works. It's very simple and self-explanatory. And yeah, I really hope you enjoyed the video. As I said, feel free to check out the links down in the video description, and make sure you are subscribed to not miss out on the future uploads. Okay, guys, I will wish you all a very good day, and I will see you in the next video. Goodbye.